Traders, Custom Vinny coming to you from theclosingprint.com on October 27th, 2019. In this edition of your weekend video newsletter, we'll discuss the indices near all-time highs, with the London Stock Exchange pulling back 4%, in addition to the Hang Seng and the Bombay Stock Exchange. The Nikkei was higher. All of the big cap tech names rallied last week. Tesla outperformance, 27.7% gain on the week, followed by Intel and Nvidia, 9.93% and 7.38% respectively for the week. The bond stock ratio is bullish. Most of our indicators are bullish. Composite is bullish. The S&P 1500 is bullish. And the ARCA Institutional Index, what institutions hold in their core portfolios, is also bullish. All of our oscillators started a bullish trend reversal 2 weeks ago, with NIMO and NAMO in a bullish cycle and confirming. S&P Equal Weight Index has a bullish signal, and it is embedded at the present time. We've got the NYHL in a bullish cycle, and the NYAD and the S&P 500 advanced decline continue their bullish trends. Put-call ratio is the caveat for the week. All of those were at the lows. The total put-call, equity only, and index put-call ratios all near recent lows. VIX is at 1265. That's a cycle low. It's bearish below its 50-day. Bullish percent is rising, and the skew is in a rising flag at 125. Cheap puts when the VIX gets this low. You can start to see institutions picking up puts as the markets trade near all-time highs. Bonds have been showing some rebalancing. We saw all durations moving lower last week, with the 10-year yield moving higher. That's bullish for equities. Gold is in a descending channel. It got rejected at the upper bounds of that channel at the 50-day moving average. Copper is bullish. That's gaining strength. That's a forward-looking indicator for the economy. If that continues its bullish breakout, look for better things to come into the seasonally strongest months of the year. West Texas crude, 27 weeks in a channel. It just closed above its 20 weekly moving average last week. Heat maps are improving both the S&P 500 and the international markets. We'll look at some IBD 50 names this week. Almost all of the IBD 50 were bullish and rising. We'll look at some MarketSmith Growth 250 showing relative strength, and stocks that are trading on above average volume in green. Bulkowski showing 5 of 5 green with a CPI signal, bullish since the beginning of October at 76.9%. We have 9 bearish patterns, 30 bullish patterns, and 227 patterns waiting for a breakout, with the numbers in parentheses the previous week's numbers. Starting off with the ARCA Institutional Index, this is important in that it is the 75 stocks most commonly held in the institution's core portfolios. We like to follow this as a confirmation and a leading indicator. These stocks are breaking out. We can see the close, all-time high. 1395.90 was the recent highs. We closed at 1396.34. That's telling you these 75 stocks as a whole are breaking out, while we're waiting for the S&P 500 and the NASDAQ. In addition, the S&P 1500 we can see is on a buy signal, confirmed by histogram. High-low percent continues to ramp higher as the markets test for a breakout this week, trading at resistance on Friday. Breaking down the groups, we have the S&P 500 advanced decline percent in the top panel, mid caps in the middle panel, and small caps in the bottom panel. We can see that with the exception of small caps, both of these, the mid caps and the large caps, are making new highs. The small caps to catch up this week, that should help propel us over all-time highs into the last week of October. The S&P 500 Equal Weight Index is also pushing higher. We had a trigger in the second week of October. We're now embedded, similar to what we saw back in June and July. This can stay up here for quite a while. What we're watching as we embed on CCI is what the number of stocks trading above their 50-period moving average, the A50R, does in the next couple of weeks. You can see it's been consolidating well off of extreme levels at 90, like we saw back here in February, and again just below that level in June and July before the markets turned over. So look for the S&P 500 to continue higher as well. And the spiders, as we test these all-time highs, MACD's above its signal line, volume is beginning to increase with a rising 9 EMA just below price action and RSI above 50. The NASDAQ 100 finished the week on a strong note, headed for this upper trend line in this ascending wedge pattern or a breakout above these all-time highs. RSI, you can see, is breaking higher now. It's above 50. Volume's increasing, and MACD's about to cross in the bullish direction. In addition, value stocks continue their bullish trend. So it's not just about growth stocks. Value is attracting investors as well. All of these helping in the current bullish cycle. As NOBL, a Dividend Aristocrats ETF, traded higher last week on above average volume. In addition, we saw the Russell 2000 IWM breaking above this trend line a few weeks back. Now it's starting to test the 159-160 zone again, with RSI rising and all the indicators in a bullish cycle. Finally, we have the Wilshire 5000, a broad measure of market participation. This daily time frame breaking out as we thought it might last week. As we started the week on Monday pushing higher, we followed through with the cycle just shy of extremes that we've seen in the past. In September, we hit that peak and reversed shortly thereafter. While this time we are attacking these highs again, and the indicator is not quite overbought. So look for follow through in most stocks as this broad measure of market participation forecasts in the short term. The advanced decline for all stocks trading on the New York Stock Exchange also moving higher, closing at all-time highs last week. While the McClellan oscillators for both the New York Stock Exchange and the NASDAQ Composite continuing to push off of these lows that we noted 2 weeks ago. Therefore, we're looking for these trends to continue in the short term. Starting off on Monday, we are continuing a bullish signal with VIX green at the present time, signaling a series of higher highs and higher lows should persist on this 60-minute time frame, while the bearish trend in VIX daily continues its path lower. The 50 period is dropping. VIX nearing the red zone, where we've seen inflections in the past, back here in late July and also in late April, the 1st of May. So look for a little bit more downside with lower VIX. That means your puts are going to be less expensive, which would indicate we could see skew starting to rise again like it did back in September of 2018 before the markets rolled over. So as we start to near resistance, look for skew to continue climbing, indicating institutions are taking the opportunity to hedge their positions into the seasonally strongest months of the year. It should be no surprise to traders and investors that the bond stock ratio is turning back down as fund managers seem to be in a state of rebalancing their portfolios. The ratio between the UST and SPX bond stock ratio continues to drop, which would be short-term bullish, confirming everything else that we're seeing at the present time. Yields have reversed as well, with the 10-year yield gaining over the 3-month and the 2-year. Once the 2-year gets above the 3-month, the steepening of the yield curve will continue to confirm that we should see better things to come in the near term, as we've seen in the past, when the 10-year found support and rallied like we saw back in 2012 and again in 2016. This is happening, of course, as junk bonds and high-yield corporate debt continues to show that investors are not concerned about debt defaults, which is also confirmed by the Bank of America yield spread. Back in 2016, this was spiking higher. As bond traders were concerned about debt defaults, this line kept rising. Same thing happened back in December of last year. This line continued to rise. Presently, we see this line is dropping. The less concern there is for debt defaults in the short term, therefore bonds should move lower after its 12-month rally from the October 2018 to October 2019. We see that in bond prices and in yields as they move higher. While the 20-year Treasury bond shows evidence that fund managers have been rebalancing their portfolios after that stellar 12-month run, pulling back to our targets, 138 and 136 in the short term. Most likely, we have a MACD cross and RSI continues to drop. This, of course, is also reflected in AGG, the Barclays Aggregate Bond Fund. This is what bond traders use as a benchmark. So as this moves lower, look for yields to continue the rise like we just showed you on the 10-year, thus confirming better things to come into the seasonally strongest months of the year for the stock market. Of course, counterproductive is the US dollar, which bounced this week, started higher on Monday, pushing off of the 200 period moving average back to the 20 period. We do have the 50 period moving average rolling over, so look for a bounce back up to that level and a rejection if you're bullish. If you're bearish, you want to see the US dollar continue higher and push right through the 50 period moving average and back to a potential triple top high as RSI starts that bullish trend. That said, copper is showing a bullish breakout of this wedge we've pointed out repeatedly over the past few weeks. This would indicate that the economy is starting to improve as copper prices rise. Construction and home builders' demand for copper is increasing. That would indicate that the economies are improving around the world, and thus we could see higher prices in the equity markets. This, of course, is also happening in the crude market. Oil and crude oil, USO, did close above the 20 period moving average after 28 weeks of this range. It appears that we bottomed off the lower part of this range. This is bullish for equities if the crude oil contracts start to move higher, and bearish for equities if we break down through these lows. Finally, we did see gold pushing a bit higher inside of this descending wedge. It got rejected at the 50 period moving average and this volume by price band resistance level. RSI is at 50. So depending on what happens with gold this week, we could either get long on a breakout or short if this continues to move lower. Sectors are also improving. Focus on the green areas this week. International markets are also improving to start the last week of October. Transports broke out last week. Watch for airlines, trucking, rails, and shippers, all of them showing bullish action. Small cap and large cap biotechs also looking pretty good. Small caps looking a bit better than the large caps, IBB, for the week. We did get rejected at the 200 period moving average. Look for big caps like Biogen, Celgene, Amgen, Regeneron, etc. to move higher. As this trend persists, MACD is above its signal line and rising. Materials are also improving. Communications held above the 20 period moving average. That would be Netflix, Comcast, Disney, Charter Communications, etc. Energy also cooperating. A number of you pointed out this low several weeks ago, pulled back last week, and then followed through into Monday. MACD is above its signal line and rising. Financials have been outperforming for the past few weeks, as we pointed out. Banks, broker-dealers, and investment advisors, asset managers, all improving. While most companies are reporting better than expected earnings and bullish forward guidance, we see XLI also moving higher. We had Caterpillar breaking higher last week. along with 3M. Not to be overshadowed, the technology sector also broke out to new highs. As many of the big cap tech names pointed out in the opening monologue, forged higher highs and higher lows on above average volume. We do see XLK with a MACD cross moving higher and volume looking pretty good last week, while consumer staples pulled back a hair from a triple top, and utilities, XLU, pulled back from a double top, with MACD turning back down. Healthcare started out the week strong, pulled back to standard deviation 1. We're looking for a bounce there as pharmaceuticals and biotech stocks help lift healthcare providers. And finally, consumer discretionary, which we're looking for a bounce back above the 20-period moving average going into the fall and holidays, with retail showing a bullish breakout above these pivots. Volume has been pretty stellar with MACD above its signal line. So look for performance in stocks like Lulu, Walmart, Target, Dollar General, Dollar Tree, and others going into the fall and holiday season. Here is the IBD 50 for the week ranked by performance at the close on Friday. Do note that 38 of the 50 are green and pushing higher, while 12 did close red on the week. So we'll look for these stocks that are showing strength to continue as confirmation on any stocks that we're considering taking for trades into the last week of October. Adobe finished higher on the week, 3 white soldiers. MACD's trying to cross. Alexion Pharmaceuticals, new on the IBD 50 list, pushed above the 20-day. What I'm looking for is a flag. We do see buyers stepping up on Friday and Thursday at the lows of the day. So if this starts off with a bullish candle on Monday, probability is that we're going to break out above this 108 level, test 110, and ultimately 125 in the short term. A safer entry would be a bullish candle on Monday, followed by a bullish candle on Tuesday that takes out 108. Arista Network showing similar price action, moving above the 20-day, buyers stepping up on Thursday at the 21-day test. A bullish day on Monday would be a confirmation. Look for a break above previous pivot highs. Baozun and many Chinese stocks saw active buyers last week. Look for a follow-through day. A bullish start to Monday would signal a test of this pivot high. RSI is rising above 50 and MACD is crossing. Look for a continuation in the momentum in the bullish direction if these buyers persist. Boot Barn showing higher highs and higher lows. Next wave appears to be a breakout. RSI is rising, MACD is above its signal line and bullish. Many of the banks like CVV Financial continue higher, reversing off the Thursday lows. Buyers stepped up below that 20 level, pushing prices back, a bullish engulfing candle, looking for a gap fill and a follow through to the upside as RSI moves back above 50. Real estate was weak. Look for REITs to pull back in a little bit and test their rising 21-day moving averages. Technology was strong last week. CDW is in the hardware, software, and security space. Look for this base breakout to push prices higher as RSI remains above 50 and price above its bullish 21-day moving average. Chegg is back. We're looking for this to follow through. Push off the 21-day. MACD is above its signal line and RSI is rising. Comcast had a bearish engulfing candle on Thursday. We did see buyers step up on Friday, pushing things back above the 21-day moving average. RSI is rising. Remember, XLC, the communications sector, did perform last week, so look for Disney, Netflix, Comcast, Charter Communications, and other big cap names in this space to continue higher as a group. Copart from previous lists is consolidating at highs. Essential Properties Realty Trust, this one is bucking the trend. It's pushing a bit higher. FSS, Federal Signal Corp, this one we looked at last week, breaking out of this base. Looking like it's going to make higher highs now. Push up to ATR bands number 3. RSI is rising, MACD is above its signal line, and volume increasing. Look for a bullish day on Monday and use your trade of the day setup for entries, exits, and stops. FleetCor Technologies looks like it's going to break out as well. RSI is rising, MACD is above its signal line, and volume is increasing, with three white soldiers on the reversal. A nice bullish three-candle pattern. Fortinet inside day, but do note that buyers stepped up at the lows of the day on Friday. Look for that to follow through and push higher. We saw the same thing with Under Armour, UAA. In mode treated us very well last week. We did exit on the highs on Wednesday. We were looking for a little bit more pullback. That's showing strength with a bullish engulfing candle taking out Friday's price action. The body is what I'm looking at. Volume, I'd love to see this pushing higher on above average volume. So let's check this out on Monday and see how it goes. If I forget, do remind me. MACD's above its signal line. Just like to see more volume as RSI tags over bought territory. JCOM, in a bullish trend, I like buying the breakouts, but once they've broken out, I'd like to see a stock pull back and hold a bullish 21-day moving average. We're seeing that now. So if we get a bullish day on Monday and Tuesday, that would be a safe entry. RSI is above 50. MACD would turn back up as a function of price. We did see above average volume as it approached the 21-day on Friday. Buyer stepped up at the low of the day for the past 3 sessions. That's your stop going into the week. JP Morgan, one of my favorites in the banking group. Big cap banks continued to forge a path higher with MACD above its signal line, volume increasing. A little bit far away from the 90 MA. I'm looking for a flag if you missed the entry on the breakout here. RSI is showing muscle. Lululemon and Under Armour, among others, look pretty good going into the week. Lululemon looks like it's going to break out. Came down and tested the 9 EMA for the past 5 trading sessions. Same thing we saw on Roku. Looking for a breakout above 209 this week. While Under Armour did hold the 9 EMA, nice bullish candle on Friday. We had buyers step up on Thursday. Look for a push above 2145, then 2188, 2190 for a test of 27. That's a good 6 points in the rally with RSI showing and suggesting there's more upside to come. Volume increasing, MACD's above its signal line and the zero line. So if we get a bullish day on Monday, look for a follow through. Then we can move our stops. We're already in this one with a small position, looking for better things to come. Microsoft is looking very strong. As the saying goes, the longer the base, the higher in space. This is a second stage base. After this base reset, this low right here took out the previous highs of this base. We got a 20% rise, so all the conditions are set using IBD methodology for a second stage base breakout. When that happens, add 20% between bases, typically, before IBD followers and others start to take profits. That would give you a target of 168 over the next few months. New Oriental Education, EDU, in the China education and tutoring industry groups, both EDU and TAL showed similar price action as we look for a follow-through on this bullish breakout. RSI is above 50, MACD is above its signal line, and volume is increasing. Paycom Software, 3 white soldiers off the lows, nice reversal pattern. Looking for a continuation above the 21-day on Monday. RSI would then be above 50 and rising, MACD's crossing, and volumes increasing. Everything's shaping up for stocks like this. Paylocity also looking good. MACD, RSI, volume needs to increase. PayPal Holdings, along with some of the payment processors, all looking pretty bullish. We got a bullish engulfing candle on Friday, taking out the body of Thursday's price action. Looking for a test of this pivot high. If it gets through this level, anticipate that you'll see some resistance at ATR plus 3. RSI is rising. By that time, if we get through and flag above this level, look for a test of the 52-week highs shortly thereafter. Restoration Hardware from previous watch list, breakout of a 3 weeks tight pattern, persistent price action thereafter. We had a nice bullish engulfing candle on Friday. RSI showing muscle. MACD is flat and volume increasing. So we're looking for some momentum here in the retail space as well, which you might remember broke higher last week above this pivot. So look for a move higher in all these retail stocks and clothiers into the seasonally strongest months of the year and the holiday season as we approach 2020. SS&C Technologies, nice little channel pattern. A breakout would give us a long, a nice bullish pattern. It looks like this is going to follow through. We got a 3-candle reversal to start the week on a doji and spinning top on Wednesday. Thursday back above the 21-day. Follow through, showing bulls are in control. Look for tests of these previous pivots as it breaks higher into the gap in the weeks to come. MACD's back above its signal line, volume starting to increase, and RSI is rising. Salesforce also looking pretty strong, back above the 21-day. A break above this trend line connecting the highs is what we need to see in the short term. RSI is rising, MACD's above its signal line, and volume is increasing. SolarEdge moving higher while the majority of solar stocks have moved lower. First Solar and Canadian Solar all getting hit last week. SolarEdge continues to show buyers stepping up at the lows on Friday. StoneCo, company out of Brazil, pushing higher. Looks like this is going to continue on Monday and Tuesday. RSI is above 50, volume increasing, MACD's back above its signal line. Look for a bullish continuation day or a flag, either of which we'll be interested in trading. Timken Company from previous watch lists continue this extension above this pivot high. Next pivot high is the next target. RSI is starting to show muscle. MACD's above its signal line, and volume is pretty obvious with the bulls in control. That said, don't chase it up here. Look for an opportunity to pull back into Friday's price action. At best, this could just continue. Regardless, I won't chase it. We're also watching Viva Systems off this double bottom and support zone. Look for a pushback above the 21-day. And Visa, another payment processor that's looking strong, back above the 21-day moving average, trying to take out these pivot highs. If it does, look for a test of recent highs. RSI needs to confirm by moving higher as a function of price. Volume needs to increase. MACD needs to continue higher as well to show bulls are in control. Wyndham Hotels and Resorts, a lot of these stocks moved higher last week. Nice bullish reversal and follow through on Thursday and Friday. Looking for a test of these pivot highs. RSI is rising above 50. MACD is crossing and rising above its signal line, and volume is confirming institutions are present. A few additional stocks of note. We got Apple with earnings out this week. We have a base reset breaking out with a target of 276, 20% above this pivot, with MACD above its signal line and rising, and RSI showing muscle into earnings on Wednesday. Centos also showing decent price action. Base reset. This is a second stage base, looking for a breakout. Add 20% to the top of this. 54 points basically as the stock rises over the coming weeks and months. This is an indication of strength in the economies globally, as this company has over 1 million clients worldwide that it sells uniforms and corporate identity programs to. This is an indication that there is economic improvement despite what you hear on CNBC and the financial media. That's a thesis, of course. Proof will come on the breakout. In addition, we had a base reset on Nvidia after a stellar climb from the 2016 lows, where we originally at the 3350 zone when we first started the chat room and trading room in March of 2016. The stock since moved higher, broke out of this base, a 155% gain before we hit the highs and started to disappoint. This base reset and breakout now is signaling that we could be on the move back up to all-time highs, and a big cup pattern as well as a W pattern confirmation breakout above this 190 zone last week. MACD is above its signal line and rising. along with RSI in the upper panel. Volume is increasing. Look for better things to come in Nvidia in the weeks and months ahead. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on October the 27th, 2019. We'll send out a watch list around 11:30 and 8:30 on the West Coast. So make sure you check for that in your inbox. Otherwise, have a great weekend. Enjoy what's left of it, and we'll see you in the morning. Take care and have a good evening.